Good morning, it's Thursday, it's the 4th of August and it's the day before the US Non Farm Payroll number is released on Friday. And on that note, let's have a look at the numbers that are coming out tomorrow. Okay, there we go, there's the US dollar. So we've got average hourly earnings. These numbers always come out with the non-farm payroll number. But the one that we're really looking for is the non-farm payroll for July. Last month, 372,000 jobs were created. Watch for the revision. There's usually a revision of that number. And then we're looking for a growth rate of 250,000 jobs for the month of July. So if that number is weaker, then recession worries will, rear their ugly head again. Maybe they'll be concerned that the interest rates won't go up as far as they would have otherwise done. It's that same old story, isn't it? Are we heading to recession, or will inflation keep growing? So a weaker economy from less jobs would help the inflation situation possibly, and may encourage the Fed to take the foot off the gas as far as interest rate rises are concerned. Who knows? The real worry is that the number is strong, and then we're going to be very concerned about higher interest rates. The Fed keeping their foot on the gas as far as pushing up interest rate goes. So and also watch for the revision, as I say. If that number is revised up again, that would be expansionary for the economy, and that we would increase worries about inflation. Okay, let's just have a look at what's been going on with some of the markets. So gold spiked higher through my resistance level. I had 70. What did I have? 1775, 75. No, I didn't. I had 1770 to 1775 as my resistance level, and then on Tuesday we spiked up through that, but we reversed and came down and closed lower. So not quite a bearish engulfing candle, but certainly quite a negative candle. There is definitely a bull trap there. We are in a bear trend, of course, ever since we peaked recently earlier in the year. Making a bit of recovery now. Yesterday I had my resistance level at 1765, 1770, and that definitely worked. So we'll see whether these resistance levels hold, and my theory that gold will turn lower, see if that actually works. Silver held the resistance level perfectly, so that did work. If you did get into a short in silver, you may have already taken a little bit of profit. We dipped a bit, not a huge amount. So again, that level will be relevant for today around 2010, 2030. Oil is in a correction, as you can see. Nice correction. Actually, yesterday, what did I have? I had strong resistance at 96.0096.20, and prices collapsed from a high of 96.57. So if you did jump into a short position there, I didn't actually put it on the trade sheet. I don't tend to put oil trades on the trade sheet, but if you're trading oil and you got into that short position, that looks good. The question now is whether we can hold the 200-day moving average, which is around $89. We'll see. Okay, the Aussie dollar made a good recovery recently, hit my sell level, my resistance level, which was at 70.45 up to 70.60. We got to 70.46. If you did manage to get into a short position, that really did work very well. I had support down here around 69.10, 69.00, stops below 68.80. So the longs down here are working too. I'm hoping you caught both sides of that trade, but you can see where the range is for the time being. We will wait for a breakout of that range. Quick look at the dollar yen, tumbled to the first support level, nice and clear. This one around 130.80, 130.60. Beautiful. Just touched the big fib support level and the 100-day moving average, bounced off. Nice green candle, good recovery. Close at the high of the day, and we had some follow through the following day. So it all looks quite positive for the dollar yen. I don't know how it will react, of course, on the non-farm payroll number, but for the time being. Now, I wonder, this is just me speculating, whether this could be a bit of a head and shoulders pattern. We'll see how big the shoulder comes. I mean, there could be a very small left shoulder, an awkward looking head, and we could get an awkward looking right shoulder with a neckline at around 130.30. Something to keep an eye on. Sticking with dollar pairs for the non-farm payroll number tomorrow, we had a really good support level for the US dollar versus the Canadian dollar, around 128.00, 127.80. The longs worked really well. I'm sure you got on that trade. That was pretty easy to get onto because we dipped down to 127.64. I know from feedback from some of my subscribers, you managed to jump on that. We've got an almost bearish engulfing candle yesterday, however, so it looks like we could dip back to that support level. See if it works again. See if it holds on the non-farm payroll number tomorrow. Stock markets, we've been doing well lately. I called this rally pretty much from the beginning. I was a bit confused when we traded mostly sideways, as you know, but I stuck to my guns. I said the stock markets would recover. Now we've got through resistance here, which of course became support. So buying down at 40, what did I have? 41.10, 40.90 yesterday. If you were buying down at that level in the E-mini S&P, you've done really well. Good recovery, straight up to 41.70. As you know, if you've read my morning report, I think we can continue higher, probably get up to the 4200 area. We'll see what happens when we get up there. I am looking for stronger resistance levels to hold But as you know, actually my target really sort of 41.80, 41.90 for this move. We're about halfway there. Nasdaq also, we did well. What did I have that? We had first support at 12.850, 12.800. What was the low? 12.867. So we didn't quite get to the support level. We bounced off it. Although if you had longs from the day before, you'd done all right. You'd have had to run them overnight. But we're now stabilizing well above the 100-day moving average and pushing higher. You've got the targets on the analysis that I sent you this morning, or if you're a subscriber, log in and check the US markets. But it looks like we can continue to push a little bit higher in the Nasdaq. Dow Jones, of course, pushing higher as expected. A little bit more confusing on this because we had quite a deep pullback, but then we've got a good recovery yesterday. We can hold above these moving averages, the 500 and the 100-day moving averages, then that should act as a platform for us to push higher. I think the gains are going to be a little bit more limited. I can deal with that next week. But I will, of course, give you the resistance levels on the emails in the morning. So we'll see if we can push higher tomorrow on the non-farm payroll number, and maybe that can get us up to a resistance level. This will be the big test next week. If we hit these resistance levels that I'm looking for, then we can figure out whether this is a bounce in a bear trend, or if this is actually, we've seen the end of the bear trend and the market will continue higher. Personally, I think we're going to hit resistance and turn lower. We shall see. Okay, that's it. Good luck if you are trading over the non-farm payroll number tomorrow. Be careful. We'll see if my ideas work. Gold, expecting gold to go lower, stock markets to go higher. Oh, let's have a look at the dollar index. So I posted on the Telegram channel, on the private Telegram channel for you subscribers, that we had hit a good support level in the dollar index, and there it was, bang on a 50% fib, bang on a long trend line from February, and the 50-day moving average. So there was a good chance the market would bounce, and indeed it did. Not really affecting the euro versus the US dollar. So you wouldn't really have benefited by selling the euro US dollar. That's just trading sideways. But you can see the dollar index is looking quite positive to me. We're even breaking above this trend line here, which indicates to me that we can push higher. Obviously, we'll need some data out of the US tomorrow to encourage that dollar higher. Some Fed Reserve members during the week indicating or sort of stating that maybe the stock markets were getting ahead of themselves in believing that the Federal Reserve would ease up on the interest rate rises and maybe even cut rates next year. They kind of poured cold water on that idea. So that's helped the dollar this week, just in time actually after I suggested it would bounce. Now, the 10-year, I talked about this head and shoulders pattern, the 10-year bond yield, and we have dipped and returned to the neckline and the Fibonacci resistance and the 100-day moving average on the bond yield, the 10-year bond yield, 10-year T-note yield. So it looks like the yields will continue to decline. So far, we've tested that resistance area and backed away. So that could be interesting. We could be seeing lower yields again. We'll see what the number comes out with tomorrow and whether that does increase the chances of a recession, which of course would help these yields to decline. Okay, that's it. I hope that's given you some sort of outlook for tomorrow. And then I'll try and do a weekend webinar over on Sunday. Just to remind you, if you're not a subscriber, you might want to have a look at what we offer as far as daily signals and technical analysis goes. We produce a number of reports. We cover 21 markets. Look at the menu. I've got a training course. You can book a free mentor session with me, and I'll do everything I possibly can to help you with your trading. And if you go to my blog, you'll see lots of free articles, education and analysis posted there. Okay, that's it. Good luck today. We will chat over the weekend.